Hello, today is Wednesday, April 7th, 2021, and thank you for joining me for another edition of the Market Commentator Podcast. My name is Andy Wilms, and I am the President and CEO of the Milwaukee Company. Joining me this morning is Jake Wilms, along with being my son. Jake is also a quantitative analyst for the Milwaukee Company. Thanks for joining me this morning, Jake.
Yeah, no problem. Thanks for having me back on the show.
We're very glad to have you. And today, Jake and I will be talking about cryptocurrencies and in particular Bitcoin, and more particularly whether Bitcoin is likely to be widely adopted as a currency used to conduct commercial transactions, or if it's going to be limited to simply an investment that people make in an effort to, because they think it's going to appreciate in value. But before we get started, I'd like to remind our listeners that this podcast is for informational purposes only, and listeners should conduct their own independent research before acting on any information or opinions expressed during this podcast, and that the views expressed today are Jake and my personal views and not those of necessarily of those of the Milwaukee Company. And with that, Jake, let's get started by, at the very beginning, which explain to our clients, just give them a very brief overview of what Bitcoin is.
Yeah, so Bitcoin is a cryptocurrency. Cryptocurrencies are digital, independent currencies that are operated without the use of the central bank. All the transactions are logged and tracked on what's called a blockchain, and I'll talk about that more later. You can refer to it just as a public anonymous ledger to keep information available for people. And Bitcoin is really the most popular cryptocurrency in existence. It's the most widely traded and most well known. So I'm sure some of the more financially savvy listeners are well aware of what Bitcoin is generally, but there's probably a lot behind the scenes and they don't really understand. So happy to clear some of the things up.
Well, where do they come from? Where do these Bitcoins come from? If they're not issued by a government entity, how are they created?
Yeah, so it's really interesting. Bitcoins are actually what they call as mined. So one of the really unusual side effects of the rise in cryptocurrency is that the cost in computing parts has dramatically soared because people use computers to artificially mine them by solving equations and verifying transactions. And since there's such a demand for these Bitcoin, they've actually intelligently created a means of awarding them at a fixed rate that decreases over time. So every 4 years, the amount of Bitcoins that can be awarded in that span is cut in half. And that also means that eventually there'll be a fixed number of Bitcoins that can only ever be mined. So it is not like a normal government-backed currency where a central bank can regulate it, print more if needed. This is not the case of Bitcoin. It actually only has, as in the code, 21 million that can ever be mined. And currently we have about 18 million of them in existence.
And since the Bitcoins are awarded to these miners at a fixed rate that is cut in half in every 4 years, it's my understanding that it's going to take 120 years to mine the remaining 10% of Bitcoins that would be needed to get to the 21 million limit. So they started out, it's pretty ingenious. The person who actually established Bitcoin, who's still isn't known, it might be a consortium of people. Nobody really knows who did it. They've come up with a fictitious name to refer to the person, but they've remained anonymous. But it's really ingenious how it started out where you could create these Bitcoins quickly to get some in circulation, and as it gets slower and slower and slower. But there's still always being an incentive to continue to mine them because it takes a lot longer to create new ones, but new ones are more valuable, much, much more valuable than they were initially. So it all works out pretty well. It's pretty neat. Now you referenced that these Bitcoins or cryptocurrencies in general are tracked using blockchain technology. What's that?
Blockchains, it's complex, but the best way I could describe it is it's a collection of information that's stored electronically on computers. And the big advantage to blockchain is it's supposed to be a more open source and widespread version of a database. if you think about a traditional company, we'll just use Google as an example, they will have server rooms and data locally. That's just their own. And they will use their own means of storing that and organizing that and managing it. But blockchain is completely different. There is no one master copy of the data or one owner of the server and the database itself. What actually ends up happening is that there's hundreds and thousands of people that have a copy on their local machine, and they are then used as a verifying tool to make sure that the information is correct. And if the blockchain identifies a discrepancy, it will check it against all of the other copies of that database across the world and be able to very quickly spot inaccuracies or, in this case, maybe fraud.
I got it. So it's not, since it's spread out on all these different computers, I guess it's the miners who hold the data, or maybe they don't even necessarily have to be a miner, but it's spread on all these different individual computers throughout for everybody who's participating in the blockchain. And it's all tracked mathematically. I could see why, there's not just one computer that a guy could hack. He'd have to hack all of them because they all act in concert to maintain the blockchain.
Yeah, exactly. And another key, really important part for how the Bitcoin blockchain works is that these, and this is just most blockchains in general, it's not exclusive to Bitcoin, but there's blocks. These blocks are what store the information. And when they are filled to their capacity, they are then chained to the previous block in a chronological order. And this process of chaining them are done from these computers that I talked about before. They have to process very complex mathematical algorithms. And this is a concept of proof of work that needs to be verified by people who are in effort of trying to maintain the blockchain, but also seeking the financial benefit of owning some of themselves. So it's sort of like you scratch my back, I'll scratch yours kind of deal, where a lot of people around the world are investing in computing technology that can handle these sort of mathematical algorithms. And in their efforts of doing this and forking up the money to do it and maintain the blockchain that everyone needs, they're able to acquire some for themselves.
Well, it's one thing's for sure. They sure have caught, Bitcoin has really caught on with the investing mainstream. It's become a mainstream investment, it seems to me. Don't you agree?
Yeah, I think so. I think you can see that all over the place. Bitcoin's valuation is one thing, but I would look more so towards its acceptability in day-to-day operations. And my favorite example of recent is the Sacramento Kings. They're an NBA basketball team, and just recently they opened up Bitcoin as a method of payment for both their employees and their players if they choose to receive their wages in Bitcoin instead of US dollars. And they're not the first sports team to do that as well, but it's interesting that you can see this shift and that people are giving people the option in their workplace even to receive Bitcoin instead of US dollars if they want to be investing in crypto. And you can even look at Tesla. They're one of the first major companies that I've seen to accept Bitcoin as a form of payment for like a big time purchase, like a car. So it's pretty cool.
Right. Yeah, and because blockchain technology emphasizes privacy, right? That was the whole point of one of the big points of setting up these cryptocurrencies is that it's very private. That it's difficult to estimate how big its market size really is. But as you pointed out, there are some clear signs that Bitcoin's use in commercial transaction is growing. You've mentioned a few of them. A couple of the more mainstream ones are, MasterCard is now said it would process Bitcoin payments on its network in an effort to give businesses and customers more choice on how they buy things. And PayPal is also allowing customers to buy, hold, and sell a range of cryptocurrencies, including Bitcoin, as well as allowing them to actually make purchases with Bitcoin at more than $26 million businesses. So there is an increasing acceptance of Bitcoin as a type of currency. but there's still, the big problem as I see it, and why I don't know, it's going to be hard for Bitcoin to become a really popular form of currency, is it's so extremely volatile. I mean, the price of Bitcoin can go up or down dramatically in the course of a day or certainly in a week. You see 10, 20, 30% fluctuations in the value of Bitcoin quickly. So if you're using it, to buy a car, and you don't really know what you're paying for the car because you don't know what your Bitcoin is worth until the moment you sell it, or same thing if you're getting paid in Bitcoin and the price is fluctuating all over the place. And, how do you know what you're really earning? So until its volatility slows down, it's going to be hard for it to compete with more dedicated currencies, it seems to me. But I do think its volatility is gradually slowing too, and that's to be expected because as it becomes more valuable, a large change in price is a smaller percentage, right? If when Bitcoin was worth $50, a $5 fluctuation is a 10% move, right? But now that Bitcoin is worth almost $60,000, at least it was yesterday, maybe over 60,000 today. I don't know. A $5 move is decimal dust. Doesn't mean anything. So it takes, now that it's $60,000 a coin, you have to have a large price movement to be a major percentage change in value. So that'll help volatility too, as will it's becoming more accepted as an investment. Let's talk about that for a minute. Let's talk about Bitcoin as an investment. Why do you think it's becoming so popular amongst investors?
That is hard to answer because, as you well know, I'm sure, there can be so many different things that correspond to an investor's choice in their portfolios and their time horizon and their goals and their risk tolerance, especially. But some of the more obvious and core fundamental pieces to Bitcoin are its correlation to other popular assets.
You're right. I mean, Bitcoin is a very uncorrelated asset to the bonds, stocks, and gold and whatnot. And so when you own it as part of an overall portfolio, it creates a diversification benefit, right? Because what happens in the stock market doesn't necessarily affect terrifically what happens to Bitcoin, or what happens to interest rates doesn't really, and the bond market doesn't really affect Bitcoin. So you might have assets moving in opposite directions, which is generally speaking a good thing because it makes your total return of all of your investments more stable. I get that. That makes a lot of sense to me. And I guess another idea might be, there's a lot of fear among investors relating to traditional assets, especially as a result of COVID-19 pandemic that created a lot of fear among more traditional assets, which created sort of a perfect environment for the Bitcoin revival. As investors were looking for safe havens like Bitcoin and gold, and just put their money when the markets were going, really struggling. And then I suppose you mentioned before, Jake, that the supply was limited, and perhaps that also adds to its value. What do you think? I mean, clearly.
Well, I wanted to jump in and mention about the correlation. The interesting thing about Bitcoin moving into the current times is that it's actually becoming more and more correlated to major pieces like the S&P 500 and gold, as it becomes more, what I believe to be more popular. Traditionally in the past, it was very, very neutral, almost like a zero correlation to these things I listed. But recently in 2020, everything is appearing to be reaching these all-time highs. And I can't say for certain why that's the case, but my best guess, I should say, would be that the growing demand for it and the popularity is going to be driving it closer and closer to those other major assets that are commonly traded. So even though it appears to be a benefit today, that it offers a correlation benefit, I'm not convinced that that's going to maintain because of the behavior that Bitcoin has been showing in the last year or so. If that continues, then that correlation benefit will deteriorate. But
I have a
fortunately,
different.
that isn't the only reason to invest in crypto.
No, but absolutely not. But I have a little bit different take on that. My view is it's not that these two are becoming more certainly there probably is more correlation that comes gradually as a result of increased acceptance, but I think it's because the government, all the government stimulus programs have added a huge amount of liquidity to the system, to the overall economic system, and that liquidity has to have a place to go. So a big part of that liquidity is ending up in the stock market. But another big part of that, some of that liquidity is also ending up in the cryptocurrency market. So they're both benefiting from this outside source, so to speak, that being the government stimulus programs. Once those stimulus programs end, I suspect you might see the correlation between the stock market and Bitcoin once again diverge to be more consistent where it has been in the past. So I do think Bitcoin will offer, just like gold continues to offer a diversification benefit for centuries. I think, conceptually, it seems to me that Bitcoin should as well. So I think that's a possible reason too. But do you think let's talk a little bit about the risks of investing in Bitcoin. Do you want to chime in on that?
Sure. Yeah, there's quite a few things that people should be aware of. Bitcoin as an investment, as you mentioned already, is volatile. So compared to other traditional investment alternatives, this option would be an extremely volatile choice. This could be less attractive than to people who are conservative or more shy about the potential for a sharp drawdown. So these large price fluctuations may make you nervous, then Bitcoin may not be the thing for you because it is so volatile. And
Yep.
that is a legitimate thing to be wary of when investing, especially if preserving your principal is more important to you than capitalizing on the potential return in the next coming year or 5 years or whatever your time horizon may be.
Right.
But outside of
Exactly.
that, Bitcoin, there's things like, I would say there's some legislative risk to Bitcoin. I have seen articles and loose topics talking about how Bitcoin may be under regulation in the future because of the way it has grown and some of the different examples in the past that have seen alternatives to the US dollar have been under regulation by the government because it's something that they can't manage and it could cause a problem for their economy. So I wouldn't rule out the possibility of government stepping in and adding restrictions or even outright banning its behavior. I wouldn't say it's likely, but I can't rule it out. So there has to be some sort of legislative risk in there as well.
Sure. I guess governments, they wouldn't want to see their own currencies undermined by Bitcoin, right? I mean,
Yeah.
the government's ability to control the currency is critical to their ability to maintain or trying to support the economy. And we've all seen that in this most recent economic crisis. It was the Fed's ability to use its power with respect to the dollar that was critical. So there's no way governments are going to allow that Bitcoin to undermine that. That's extremely important to them.
There's an interesting topic that was kind of floating around on Market Watch early last week, talking about the 1934 Act by President Franklin Roosevelt. If you know what that's about, it was a controversial at the time that ended the private holding and use of gold as money. And I know it's much different today, but that sort of act I could see being applied to Bitcoin because of its in an effort to maintain stabilization in an exchange. If the U.S. government can't maintain Bitcoin in any way, they may prevent its use. So I think that's a legitimate concern as well. Other ones that I would see as more minor would be something like a user error. There's been cases of people who have lost their access to the Bitcoin because they were unable to recover their account information that would maintain the funds. And if that is the case, they only actually have a fixed number of attempts at the password before the data is lost and the coins are released. So if that's the case, it's extremely risky if you're not careful about your authentication information. You could potentially just lose your money without any way to get it back.
And there have been some examples of that, right? I mean, there have been some people who've lost Bitcoin, and several of them, which would have been worth a huge amount of money had they not somehow screwed up their code or lost their code or access code. And if you lose the password to your phone, you can figure out a way to get around it, right? Or your computer, you lock yourself out of your computer if you get the password. There's avenues for help. You lose your code, your access codes to your Bitcoin, and you're out of luck. There's nobody who can help you solve that problem, and there's no government agency to turn to for help if there's a problem with your Bitcoin, which is another issue.
Right.
You can't turn to the government for help because that's its whole gig. It's not government monitored. So I don't think we have to worry too much about Bitcoin, taking the place of the dollar as the world's reserve currency. It would doing so would just, be so disruptive to the entire global economy that I don't think that's going to happen anytime soon. And as you so well pointed out, it's very unlikely that world governments would allow it to replace the dollar. But that doesn't mean it can't be a good investment. Sure. It just takes, perhaps for a small part of a portfolio, for someone who's, understands it carefully, studies what they're getting themselves into, really, and is really tolerant or has a high tolerance for risk and volatility, at least with respect to this investment. For me, I don't know enough about it to feel comfortable with it, so I probably won't be buying Bitcoin anytime soon. But I tip my hat to those brave investors who bought Bitcoin a few years ago because they and held on to them because they sure have reaped the benefits of their foresight. Well, Jake, that went quick, but I think we're just about the end of our time. So I'm just going to say thank you so much for joining me again.
Yeah, no problem. Happy to talk about it.
It's a fun topic to talk about, and one that deserves some attention. Before we wrap up, I would like to remind our audience, to please keep in mind that they should not act on anything they've heard in this podcast until they have discussed it with a qualified financial professional who is familiar with their personal situation and their investment objectives. And with that, I'll say goodbye to all our listeners and wish them a happy day.
This podcast is for general informational purposes only and is not intended to be a solicitation, offering, or recommendation of any security, commodity, derivative, investment management service, or advisory service. Nothing in this podcast constitutes or should be understood as constituting a recommendation to enter in any securities transactions or to engage in any of the investment strategies discussed. Viewers should consult with an independent financial professional or independently research and verify information presented in this podcast before acting on it.